Hello YouTube, hope you guys are doing alright. We're looking at the SNAP index and we are approaching take profit 1. This is the August initial high. It's printed around the mid-month of July, so that's where we are going. That's target 1, and target 2 is the midpoint between the July mid-month high. As you can see, it's labeled the heart of July. So we split these two highs and we get the 50%, the constant enrichment. So that's target 2, and target 3 is right here. So I want to see how it will continue printing higher. I like how it's moving. Honestly, I like how it's moving. That's what I can tell you. So how do I arrive at this bullish bias? How did we get here, buddy? That's what you want to know. Well, essentially this contrarian fair value gap, it's in yellow. It's basically a support. It's at a discount, a very deep discount, where we had collected the orders below this particular low. Smart money had closed their short positions right below this low, right? And they're going counter trend because they just purged the sell side. So now they want to go into the upside and sweep that particular high. So from discount to premium, that's the idea that I'm playing with here, right? So since we're at a discount, I want to look at bullish scenarios, and I liked the idea of utilizing the fair value gap of the contrarian trade in July's price action. You know, guys, I called the market higher in July during the 23rd, all the way from the 21, I believe. I've been calling the market higher and higher and higher and higher, and finally it gave me that idea in the 27th. Printed a huge fair value gap on the upside. That was awesome to watch. And essentially I was targeting this July mid-month high. That was the idea that I had in the 20-something of July. Now, why was I bullish? Well, it's because the market is, well, doing a handshake down here. Smart money is closing their short positions, right? And it is buying back the market. What are retail traders thinking here? Support broken, now to be turned into a resistance. That idea fails around the 20th. Why do I say that it fails? It's because the market tends to reverse around the 20-something. Why does it do that? Well, smart money is taking profit. They have a timing, right? They have a timing to take profit. And this is what I teach, okay? This is the main course of this YouTube channel. And it is the 20th contrarian trade setup. If you look at the very first video of this YouTube channel, that's what I talk about, the contrarian trade setup. So here it is in July. We had that beautifully to the upside, and my initial target was the July's mid-month. So we didn't get there. Honestly, we didn't get there, and we printed this particular high in August, the initial high of August. It's buy-side liquidity. Okay, we retraced back into the fair value gap. Now, I was looking at both sides of the marketplace when price was trading up in here around the initial high of August. I was looking at both sides of the marketplace, and I was qualifying a certain fair value gap around the 9th of August. How to determine your trade bias. That's what I did up there. And I captured the market from this high down into this fair value gap, the contrarian trade fair value gap. That was the idea, right? And it played out pretty nice, utilizing the mid-month fair value gap, because these fair value gaps pulling price back to it or repelling it away. So the mid-month fair value gap is what you need to watch out for majority of the time. If it's present in the market and it's close by, then it's going to be attracted into the mid-month fair value gap. And it's going to be a formidable resistance because the market has been bearish. So that's the idea that I went with to come down into this discount fair value gap. Now we had that idea play out really nicely, especially with the candlestick bodies. They are above that fair value gap. So it tells me that the market is bullish. How bullish? Extremely bullish, because we have the internal range liquidity. So yeah, that's what I'm watching here on the daily time frame. I want to show you guys the 1 hour really quickly, and we're gonna put away our session breaks. All right, so this is what we're looking at on an hourly time frame. And honestly, my confirmation here on Step Index, it always comes from the hourly. If I see the hourly time frame at a specific time of the month, like the mid-month, if I'm seeing that price action has these huge imbalances and some breakaway gaps, then I am going to look for my model. Okay, that's what I do. I look for price action that moves really quickly. So this movement here on the 17th, after price hit the consequent enrichment of the contrarian trade fair value gap, it hit the consequent enrichment here, sweeping the sell side liquidity. So these are low resistance liquidity trade conditions, and they usually have fair value gaps that are left open here, right? And this one as well, because we just tapped into that fair value gap upper quadrant, and then we went higher. And then we had a consolidation on the 20th, which was yesterday. So that's what I want to talk about in this YouTube channel today, right? That's what I'll talk about today. The London range, guys. The London range, this is the high that was printed at around 3 o'clock, and here's the low at 5 o'clock. That's the London range. So we kind of like stayed in between that, and we kept on consolidating. So I always want to reference the London range. The high or the low of that session is very important, because it is the very first session of Step Index or every other market. So what else is associated with the London session? Well, obviously, it is the opening of the day. So the opening price of the day, I like to incorporate it in my analysis as well, because it's the opening of the day. Whenever Step Index opens for a new trading day, I am anticipating that the market will move in a hurry. I expect it to be attacking liquidity. If it's not doing that in the opening of the day, then I wait it out. That's what I do. I wait it out. So the opening of the day really tells me how the day will perform. What do I mean by that? Okay, let's put back the session breaks, and let me explain this concept of the opening of the day, because it's really important, and I like to apply it specifically on the 1 hour time frame. Okay, that's what I normally do. Whenever there's a new trading day, the first thing that I do, I go back to the opening price, because it has a lot of information. All right, so I mentioned this huge movement going to the upside. It was around the new trading hours of the day, and price had been sprinting higher. This is where I would anticipate that very phenomena happening. Okay, so if I have a specific bias, I am bullish. I go into the opening hours of the day. I have a fair value gap here, fair value gap here, fair value gap here. Which one is important? It is the one that is closest to the daily key level. See that? So the following day, what do we do? As I said, I am looking for a fair value gap in the initial hours of the day, in the wee hours of the day, right? So we don't see that fair value gap in here. Instead, what do? We consolidate. And in that consolidation, I took out the high of London and I took out the low of London. And as you saw, we tagged the London low and then we went up into the London high. That was the idea. Classic. Okay, this one is a classic, guys. It doesn't get closer than this one. The example here is the ICT 2022 model. We want to go higher, but first, what do we want to see? We want to see the sell-side liquidity being taken first. And then we go into the buy-side liquidity. The very same London range, it played a huge role in this. Because if you see the London high, it is close to this high, the initial high that was printed of the day. So that's what relative equal highs. Even though London high is taking out this buy-side liquidity. See that? What are a lot of retail traders thinking in here? When price was trading above this high, it's a breakout. That's what they thought. But then it traded lower into a discount. The fair value gap closest to the daily contrarian trade fair value gap. That's what I call it. Right? So we traded in there and we accumulated. I believe I showed how price accumulated down here on the 1 minute time frame. Those beautiful fair value gaps there on the 1 minute time frame. And there was a plethora of setups that I had showed on the 19th of August. You guys need to check that video out. And I specifically said the price action is going higher. And this was very telling as to what price action wants to do. It wants to go higher. So in the wee hours of the day, I'm looking for a fair value gap. No, I don't see that fair value gap here. We stay in the consolidation. And I just mentioned that London is the first session of the day, right? So here's London at 3 a.m. creates, is that 2 a.m.? Yeah, it's 2 a.m. It creates that high. And here at 5 o'clock, we have this London low. If you see the 2 o'clock hour high of London, it's nested with this buy-side liquidity. Do you see that? Beautiful. And it's close to this buy-side liquidity as well. What is this? It's that fair value gap that I had spoken about. This one. This is where I said I want to see price action going into. Now it's way above that because it has the initial high of August. Why is price attracted to the initial high of August? Well, I'm explaining it right here, utilizing the London range. Now London is the first session of the day. Now, those highs and lows of London, where they are placed, is telling you a story. All right, as I said, this London high is nested with this buy-side liquidity, and it is nested as well with this buy-side liquidity. So there's a lot going on here. Down here, we have the London low, 5 a.m. It is nested with this 9 a.m., this New York low. Do you see that? All right. And then we begin a new trading day. We took out the buy-side liquidity pool of London and this buy-side liquidity pool as well. And we are kind of like printing more buy-side liquidity. And a lot of breakout traders, that's where they are trapped out here. And price action in the wee hours of the day prints this huge fair value gap here, and it proceeds to go lower, prints more sell-side liquidity down here, kind of like a whip saw into the buy side, into the sell side. It's crazy price action. Why is price action doing that? Well, I can tell you this. We are experiencing a market maker buy model. As I mentioned on the daily time frame on the 19th of August, that we are going higher with step index. So we have accumulation levels that we are experiencing in the marketplace. This is the first accumulation that we are seeing here. And this is the second one. Do you guys see that? So each and every accumulation is going to be different. These ones have been taking out the sell side liquidity and then going higher, taking out the sell side liquidity and then going higher. That's the theme that is going on here. We are going to see those fair value gaps, the wee hours, they tend to print a fair value gap. But in here, what we've seen is price action playing with the sell side liquidity. That's the theme that has been occurring so far. That's what I am observing. So this is the accumulation, another accumulation here. So we're going to see a different play of style, if we could put it like that. We could see a different theme happening maybe in the next accumulation, because we have been taking out the sell side liquidity all this time. So maybe in the near future, we're going to have one that returns into the initial fair value gap of the day, and then it goes higher. You know, I've shown a plethora of examples utilizing that very same idea. You can look at the 12th of July's price action. That's when I showed you guys how to utilize the new fair value gap, the new day fair value gap. That's what I'm talking about. So whenever I'm experiencing a trending market, that is when I like to utilize those new day inefficiencies. So in the new day, I tend to look for that fair value gap because it's going to pull back price into it, and then we're going to have a market that wants to prove itself higher because we still have that buy side liquidity. All right, so as long as buy side liquidity has not been tagged, I'm going to go and look for that particular model. Okay, that's what I'm going to do. So I am bullish, extremely bullish. Okay, so yeah, that's what I have for you in this video. See you guys on the next one.